the cryptilians and crypto crackheads. All right, got it on the first take. Sweet. Actually, the second take because I didn't have my stuff plugged in. Sitting there recording, realizing that there was nothing happening on the voice section. So let me turn my filters back on so I sound a little more manly. So I'll speak like this until they're all on. All right, so here we go, new viewers. Do you want to make more money, or do you want to keep buying coins that YouTubers talk about just to have them drop right on their faces and you're down 30 to 50% of your money? Which one do you want? Do you want to be a profit pimp, or do you want to buy and pray after listening to YouTubers who don't know anything about charts? Well, if you are new to the crypto space, defined as you've been here since, let's say, December 2020, or less time than that, then you are a retail investor. That's what this channel is all about. I'm here to help you make money, and this is for entertainment purposes only and educational purposes only. However, what we do is a couple things here. I teach you how to click around with your money with confidence that you're going to be in a winning trade. And two, I show you the proof in the pudding behind if you want more OMI, you sell OMI. If you want more Cardano, you sell Cardano. That's what we do here. You become a profit pimp. Buyer prayer or profit pimp. Which one sounds better? Stick around if you want to be a profit pimp. So here we go. And if you happen to like what you see here in this general market sentiment and psychology video, then go ahead and subscribe. But if you do subscribe, I got a couple rules. You got to let me know in the comment section which crypto pronoun you have chosen, cryptilian or crypto crackhead. Cryptilian and crypto crackhead nation, are you ready? Here we go. Okay, so a lot of people, first off, on YouTube are talking about prices to buy back. That's not a bad thing. And some of those prices are the prices, obviously, that I was talking about before they were talking about, but that's not the point here. The point is price targets are one way to try to re-enter the market when everything's on sale. However, I am not going to do that because Ethereum and Bitcoin are taking turns here, and because they are obviously moving between parallel and diagonal lines, I think it could end up being something like a cosine and sine wave. So this could be Ethereum, and this could end up being Bitcoin. Although they are technically moving together, it's going to confuse a lot of people because these price swings are like 30%. And then in the end, they might just meet up and break out at the same time. So if you want to zoom out and see what that looks like. Okay, so Bitcoin's all the way down here. Watch. Right? So between these two lines all the way down, and Ethereum recently was all the way up. So they're technically moving together. It's just a sine and a cosine wave. So I'm not for sure if price targets are going to be the best way to go about it, because it could get a little tricky because of that idea. And obviously, it's like an observation. Like, it's not just an idea. That's what's happening, at least as of now. Could that change? Sure. Like, maybe they'll start moving exactly together. But anyway. So, instead, I am going to sell whatever price happens to find itself at indicator targets, not price targets. So I don't care what price is at. If it's at 35K or 52K, I will re-enter the market with the capital I had, free to do this, prepared for this drop, since we hopefully, cryptilians, crypto crackheads, you've gotten my hints to be holding tether. Even though this is not financial advice. So somebody on the show said, I wish I could have gotten a more direct signal to hold tether. Yo, I've been saying this for a while. This is education and not financial advice. I can't just tell you to sell something and hold tether, yo. Okay? Do you want me to be able to stick around and give you technical analysis and like teaching you how to, trade without leverage? Which honestly, you can use the same techniques to trade with leverage. It's just slightly different. But there are a couple additions. And it's a lot more stress on leverage. But anyway, so if I'm telling you buy here and sell here, hold tether, no, I'm not, like, somebody's going to shut me down. So anyway, so indicators. This is what I'm looking for. It's really simple, honestly. So let's do it on Ethereum. Let's go to the weekly chart. So we're on the weekly chart. Weekly chart on Ethereum. Crunch it down, get all of price history of from the existence of Ethereum. Okay, so see where my cursor is, how the horizontal line is going up and down? All right, so try to see when my horizontal line has a lot of touch points. Not like touch points like this, 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 and that, but a lot of tops and bottoms, okay? Right here, a lot of bottoms, right? Here, a few tops, 1, 2, 3, sort of, kind of. Here, you got 3-ish, 1, 2, 3. Here, you got a lot more, 1, 2, 3, 4, like that's sort of kind of 1, 5. All right, what do you think was happening during these? Something I showed in my video late last night and the video probably before that. It's when Ethereum was going between two origin lines for 196 days. Okay? Oops. So, my strategy is this. Just look at the weekly Stokes. And I'll mix it with one other thing too. But, straw trend line. Right about there. Doesn't have to be perfect. Okay, whenever Stokes hit that, and they seem to be curling back just a little bit, probably a good time to be buying. By that point, once it's curling up, you will probably have 2 strikes probably 2 strikes of, or 3 of bullish divergence between the two, on the 2-hour chart, between RSI and price. You'll probably have, or by that point, you actually might have a higher low. Even above and beyond bullish divergence. So bullish divergence would be this. But you'll see one of those two. Well, if you saw the second one, that means you automatically saw, like you probably saw the first as well. So the higher low would come after the bullish divergence hit on the 2-hour. So 2-hour chart, look, this is what you're looking for. So once the weekly hits that, and you say, okay, now let's see what price is doing. If it's giving me some key signals that, hey, now might be a good time to do it. So it hasn't even had its real first dip. I wouldn't say. So I would say 1 drive, 2 drives, 3 drives in price, which I think it could go a little lower than that. Maybe, I don't know, something like that. 1700 might be a pretty good target. Somewhere close to this trend line. But not quite, because I think the weekly... the weekly 21 is down there. But anyway, we're going for wherever price is. We don't care where price is when these things happen. We're going off of indicators, right? So once the weekly hits that, then you can start looking at the smaller time frames. But honestly, you're wasting your time looking at the smaller frames until then. You're totally wasting your freaking time, I'm telling you. When you're waiting on a dip, I don't know, if you ever played in band or something or choir, like you have that moment where you have to like count to like, 10 measures of rests or something. So this is it. Okay? Instead of looking at other people's parts where they're singing and they're playing while you're resting, like I'm being a crackhead looking at all this. No, just take your rest. It's printed, so rest. All right? Unless you are a scalper and you're a very professional trader, but if you are, then you're only watching my channel not to actually take my advice, but to see my TA, so you can add it to your style. So you don't need me anyway if you're doing that. But retail investors, you don't need to be trying that crap. So you need to rest. Period. Okay? So weekly. After that happens, flip to the 2-hour. Look for price literally having 3 strikes of going down. Okay? And what that means is, here, since it dropped hardest the fastest, the RSI will be lowest here on the 2-hour chart. And then as it bounces, price goes lower, but RSI makes a higher low. And as it bounces, price goes even lower, the RSI makes an even higher high, and then is somewhere around breaking this white line. So once you get 3 strikes, so on price, lower, lower, and lower, but on RSI, it's higher, higher, higher. Wonder why my trading view is not working the same on this computer. That's really strange. Anyway, So you get 3 higher lows on RSI while you get 3 lower lows on price. Okay, 2-hour chart. So now you have a couple things going for you. You have the weekly Stokes saying, hey, this gives you a little bit better odds that you're entering a winning trade. Then you have 3 strikes of bullish divergence on the 2-hour. Okay. Then you might be super safe, deploying 50% of what you have. Or a third. So after that third, maybe think about entering the second third of what you're ready to deploy. After, golly, this is annoying. After the 4-hour RSI goes down, so this is one time frame up, right? So when the 4-hour RSI crosses above this line, that's an even stronger signal than the 2-hour crossing above that line, right? So when that happens, you have an even stronger probability that price will recover from that point, or is in recovery and won't just be a failed retracement, right? So the higher the time frame, the stronger this is, which is why you might tier things on your faster signals with slightly, not as good probabilities, but a decent probability. Maybe tier it a third. When you get your second signal, right? And the 4-hour RSI comes safely above this line, that might be your second third. And then maybe on a higher time frame like the daily, if something like, why is my it won't freaking let me delete these with my backspace button. This is like really annoying. Sorry. Anyway, just deal with those. When the RSI of the daily has clearly hit here and has a positive slope. Not a positive slope before it hits here. Because if you do that, it'll likely get rejected and keep heading farther. All right? Now, if Ethereum has had kind of a habit on the daily to form a trend line here and not touch that white line. So you might think, oh, if it's heading north of that, it's possible that that's the recovery, but I kind of doubt it this time. Yeah, this was during the bull run, so these aren't really big corrections. These are the corrections. So yeah, it's probably going to hit that line. All right, so that would be your third. If you want to tier things in, that would be your third. Once daily RSI, a higher time frame, which gives you an even stronger probability, both hits the line and or crosses it, and whenever it's a positive slope and back above that line, so 2 conditions, positive slope and above that line, you're probably pretty safe at that time. Is it 100% fail-proof? No, it's not. But nothing is. The way you make money in crypto is to repetitively and over time enter statistically probable trades, right? There's no such thing as a fail-proof trade. I mean, there might be some crazy instances. I don't know. But especially if you create a company and you create an IPO or an ICO or whatever, there might be something like that where you're like the originator of it. Or if you're the biggest holder of it and you are the market mover of some asset, maybe not in Bitcoin. I don't think anybody can move the Bitcoin market single-handedly, but some smaller alt like Dash. If you're the largest holder of Dash and you take on a short and then you sell a bunch of your Dash on spot market, that could be 100% winning trade. Something to that effect. Or maybe not Litecoin even. Yeah, Charlie could have, the founder of it probably could have done that. So I guess there are instances where if you are like the market mover. But outside of that, no one here is. If you're a market mover, then you really have no reason to be watching my channel anyway if you have like $1 billion to be thrown around, because you can move the market. You can be the floor, you can be the top, you can be the initiator of price drops, and you might as well just stay out of markets like Bitcoin that you can't move by yourself, right? So, but anyway, however, these indicators, wherever price may be, I bet these are going to happen at different times for Bitcoin and Ethereum. I think it's going to happen for Bitcoin first. I think Bitcoin will recover faster than Ethereum will because of the sine and cosine wave, right? And it's possible that Bitcoin has like a double bottom while Ethereum only has a single bottom, something to that effect. So the Bitcoin price will either do one of two things because it was down low while Ethereum was up high. One of two options, and I don't know which one it's going to be. Last time Bitcoin did not ping pong between origin lines like this, and therefore we haven't really had a comparison point ever. But Ethereum did. In 2017, Ethereum went sideways for 200 days, 196 days. But Bitcoin was not doing it at the same time. So the market's never seen this before. This exact situation has never happened between Ethereum and Bitcoin. So one of two things could happen. Either A, as Ethereum is still falling, Bitcoin gets a little bit more confident, is closing daily candles above 50K, then or above 51, kind of flirting with 55. And then as Ethereum makes one last quick drop, like down to its weekly 21, pierces like, $1,500 or something low, that pulls Bitcoin back like close to the previous bottom it made. Like maybe it hits 45,000 twice, goes on a 7K dip and hits the same level twice or close to that or farther down, really. I mean, who knows? So that could happen. Ethereum could pull it down, so that's one possibility. Or Bitcoin really does recover, doesn't start making new highs, but really holds strong around 55, something to that effect, 53, 52, while Ethereum's going down to like 1,500. I'm not for sure which one will happen, but one of those two is going to happen. I guess there might be a third. Bitcoin could do this. I guess Bitcoin could wait. There is a third possibility. Bitcoin could simply ride a line and wait on Ethereum. Actually, you know what? That actually might be what happens. So Bitcoin could come down here, do this, and then just ride this line. Like literally close candles like this. Some above, some below, blah, blah, blah. Okay, we're waiting on Ethereum. Ethereum, are you up? Okay, wait. And Ethereum kind of like, actually, I don't think Ethereum is going to break this line on its thing. It's got too much going for it. But whenever on Ethereum chart, when it finally gets somewhere close to that origin line, somewhere, maybe hits its weekly 21, which is just above it, which would make sense. Yeah, something like that. And honestly, it might not quite hit the weekly 21, but it's a pretty high chance it does. So, as Ethereum's trying to do all that crap, I wonder why TradingView is not allowing me to go back. That's so strange. Anyway, where was that? I think at 1,300. The all-time high, but in previous all-time high. So as Ethereum is making its way down, which could take 4 weeks, it could take 5, right? Because what Bitcoin did in 2017 on its first decent-sized correction after breaking all-time highs in June, it took, these are weekly candles, so 1, 2, 3, 4, 5 to hit its bottom. And that's a relatively fast correction compared to what the hell we're looking at now, right? That's really fast compared to this. So Bitcoin might do its thing, not make any lower lows, ride this origin line as Ethereum's coming all the way down, and I don't think Ethereum will pass that origin line. It might wick down to something like 1,350. I don't see it happening. There's too much bullishness in Ethereum. I highly doubt it happens. But it could. On a wick. The week probably won't close down there, but it could wick, I guess. But I would be targeting something like maybe even as high as 1,700, but we're not targeting price points, right? It's wherever price will be. So I'm just kind of making a small guess. Price might be somewhere around 1,700 when these things happen, or Ethereum had gotten down to 1,650, and when those things happen, it's now at 1,750, 1,800, right? So it's safely going up. It's confident, right? So I'm not trying to buy a price point, so don't get confused with me saying this. I'm just kind of making a random guess. Like when those conditions are met, Ethereum might be around 1,750, and it will have gone down slightly lower, 1,650, 1,500, something like that on a weekly wick, and is now back up above 1,700, something like that. Something probably above this horizontal. I would say it's this horizontal here might hold it up. So right there. Yeah, it could wick down to 1580. That might be 1556, but I don't care, right? Even if it wicks there, I'm not going to try to buy it right there, even though it might be a hell of a buy, because I don't want to take the risk personally that it goes up and then it wicks one more time, right? So I would want to buy it if that happens right here, and therefore I would have been buying closer to 1500 anyway. But I want to buy strength and probability that it's done. If you're trying to buy bottoms, especially if you try and use and leverage, you will lose all your money. You're going to lose it. Don't try catching knives with leverage, I'm telling you. Yeah. It's honestly stupid. And you might not lose all your money through liquidation, even if you are using good stops. But all the times you get stopped out, plus all the trading fees, you're going to wipe yourself out over time. So strongly don't recommend it. And honestly, retail investors, I don't recommend you use any leverage at all. Seriously, there's so much money in small alts. It's almost pointless unless you're really, really experienced trader. So that's what I have for you. I'm not going to target prices. I don't even care where price is. I simply will buy at wherever price finds itself when these things happen. But they might happen different times. I didn't think of that. I think both of them had to have happened. So if it happens on Ethereum second, I will probably not enter my money into the market until Ethereum does it, assuming Ethereum meets those conditions later than Bitcoin, while Bitcoin is just frickin' riding the line up or whatever it will do. So remember the three options for Bitcoin, given that they are Ethereum and Bitcoin are at different tops and bottoms of these parallel ascending lines. One, Bitcoin could either make a lower low, so it might make you think 47's the low, and then come up, get kind of confident, and when Ethereum finally dumps that last little bit, then it goes to 42 or 40, something like that. That could happen. Or Bitcoin does actually put in a low and starts recovering and stays strong around 55, something like that, which that could happen. Or Bitcoin will actually make a low sooner than Ethereum, and when Ethereum makes its final drop, will not make a lower low, and it just rides this line. Some closing above, some closing below, something like this. And then whenever Ethereum does its thing, then Bitcoin will start racing up back towards that orange line. So whenever Ethereum has those conditions met, the weekly gets down to, what number did I say on the Stokes? It's a 55, curls it around, and then I flip to the 2 hour. I see 3 strikes of bullish divergence, as I just talked about, which my drawings aren't, my keyboard is not working with TradingView. I'm really sorry. So you see 3 strikes, something like this, 1, 2, 3, but on the RSI, it's 1, 2, 3 higher, okay? And then you see the RSI get above this white line like it did right here. You see RSI do that also, okay? That's when, so assuming Ethereum does that second, those are all the conditions when I would feel pretty comfortable. And then I would feel super comfortable when those conditions plus the 4 hour gets back above its this white line here. And then I would feel like really confident. However, it is possible you miss out on a decent amount of price action and money-making opportunity. So that's personally why I tier things. It kind of hedges my bets, right? As my house odds get stronger and stronger, I'm also losing opportunity to make money. So that I tier it. Does that make sense? Are there other things that you can be targeting on Ethereum? Yeah, my trading view is acting really funky with my keyboard. Let me get some of these out of the way, since I can't delete them without going all the way up here. Let's see if there are any trends on the weekly RSI. Yeah, there is one. You could also, so I think that these will just align naturally anyway. So when you see Stokes go down and curl up, I'm thinking the weekly RSI. 3. Shit, no, don't tell me this is going to take till June. So, I guess it could. Next week. I don't see that happening. I think it's going to try to recover and then go down. This could take all of May. Ethereum might not. Man, that's a month. Ethereum might take a month to get down there. Yeah, because it's probably going to hit this line. Shit. That's a little longer than I thought. I wanted May to be glorious. Might not be glorious. Dang, I didn't realize this was happening. It's pretty far away from just, and that's, I'm not calculating it from this, from the line, a lot of times weekly RSI never hits this line. The daily always will in cycles throughout a bull market. But the weekly, actually weekly didn't last bull market. It didn't hit it at all. It formed its own little trend line, and then it formed resistance, then it formed support. So it's going to hit that. So I think Stokes give you a better heads up on, hey, I should, wherever price is now, I start looking at my other stuff. If they satisfy, then I buy. I don't care where price is. This is what I'm buying based off of targets of indicators. However, if you want a triple confirmation, you might want to look at the weekly RSI on Ethereum, given that Ethereum is going to fall a little slower than Bitcoin, given that Bitcoin is already down there. Well, no, it could do something like this. So this only took 1 week technically, and it is about at the, so it might not take all of May. I take that back. So this, I guess it could drop. That would be a pretty violent drop though. So let's see what happened here. January 20. Oh, that was the top. So yeah, so something like this could happen. Okay, watch. Let's go to January. Holy cow, my trading view acting freaking funky. So I think that was the first week of January. January 22nd. Wait, no, that's February 10th. $35, yeah, that's normal. Okay, yep, it would do a normal correction to get down there quicker. So, and this kind of like goes with the thought process. You gotta get down and get up. If you crash a little faster, that helps you recover faster, right? Like it's like my point kind of proven about that. What I've been saying the last several videos. So let's say 35. Let's take it from current price. That would wick down below the origin line. Okay, let's take it from the top. Actually, let's take it from that wick. Around 1650. So it's kind of, yeah. So even though I'm not focused on the price targets, it like a few things are aligning that it might be going between 1550 and 1650 on a wick. I don't think it'll be closing strongly down there, or 1 week could, I guess, close there, and then the next week goes straight up. Either 1 week will close down there and the next week will scream up, or 1 week will wick down there, close higher, like around 1680, 1700, and then the next week will close even higher than that. But I think it is more strategic to buy off of indicator targets than price targets. However, I have been extremely successful tearing myself in to my guesses of price targets. So you can do the same thing. An if-then statement in 3 phases. If Bitcoin hits 47, then a third I buy. If Bitcoin hits 45, then a third I buy. If Bitcoin hits, 42 or something, then a third I buy. If Bitcoin hits 39, I don't freak out and panic sell. Essentially, right? So you always got to keep that. Don't freak out, because you have to consider that a possibility. Or even lower, like 35, whatever. It probably wouldn't stay down there, and honestly, I don't think it's going to get down there. But it is possible. I would give it like a 5. It's not a small, tiny chance. It's maybe 1 in 20 chance it hits 30 in the mid 30s. But I wouldn't bet on it. It's a what if. It's not one of our 3 top probables. So if you don't want to use indicators, targets, even though if you've never done it, like try it. You might like it better. It's way less stressful. Like I said, you're in band or choir and you're resting, right? Well, everybody else is singing because your part hasn't come up or whatever. What's more relaxing? Staring at price all the time? Or taking a friggin' nap and like, oh, where are those Stokes on the weekly? Yep, nope, still at 70. All right, going back to bed. And you buy at a great price with an extremely low chance it dumps on you, right? It's way less stressful. Now, I guess technically it could be kind of not stressful to just put in your limit buys and leave them and also take a nap. So I guess that could be, but I guarantee most of you aren't doing that because you're too much of crackheads. But I guess you could be in a relaxed posturing if you do tier yourself into price targets. And then let's say it only hits 47,000. Then you have another, if you want to tier into that, but it never gets below your first one and you only have a third of your capital in, then you could say if Bitcoin closes a weekly candle above the 10, deploy the second third. If Bitcoin closes that week and the next one starts green like a day and a half or two in, then I deploy the last. Are you missing out on a lot of price action? Hell yes. But are you near guaranteeing, so there's no guarantee, but are you giving yourself like monster odds, like 90 plus, 95% plus, that when I buy, I will stay green the whole time? I don't have to worry about it going down. You are. So it is a yin and yang, right? For more guarantee, you miss a little bit more of the party. Just a little bit more. So because it's a pro and con, why don't you just tier in, right? Like get a little bit of each. That's kind of what I do. But you don't have to do what I do. This is not financial advice. I'm simply sharing, the thought processes that I've gone through my 4.25 years of doing this. And the first year losing a lot of money. Which is why I created this channel, so you don't have to, right? I'm here to help you. So, and I'm not just here, guessing prices at you and showing you things in the chart necessarily. I'm showing you actually like actionable things to do. So, if you liked what you saw, new viewers, and you haven't subscribed, go ahead and leave me a note down there if you want to be a cryptillion or a crypto crackhead, because the rules in the description in the bottom says you must, and it is a YouTube rule. I petition YouTube, so go ahead and let me know. And there are videos that should be popping up if you want to subscribe. I don't know which way it is, whatever. That way or that way. One of those ways, you'll see things popping up, and go ahead and check out my library, new viewers. So whichever one, it'll be library, and there's a bunch of videos. Watch them on 2x speed. You just got Timified.